Okay, investors are looking where to put their money in the Australian property market, and they are asking the question now very differently to how they used to ask the question due to the budget. We're going to talk about where we think the money's going with the Australian property market. Stay tuned. Billy Drury, the old man stuck in a young man's body. How are you today?
Feeling old. My legs are battered from a busy weekend of sport. How are you?
Good. So you went on a bit of a run yesterday?
An 18-kilometer run.
You do that to
off the back of riding from DY to the Big Smoke. So
wow.
Yeah, it was good.
Wow, solid. Now, guys and girls, we are real estate agents collectively. You and I, Billy, are probably 45 years of real estate we've been doing, and we're lucky because we've got optics over lots of landlords, lots of investors. We speak to hundreds of developers in the course of a month, thousands of purchasers in the course of a month, and thousands of tenants in the course of a month. And the one common thing that people are now asking themselves is like, we understand the parameters have changed due to the budget.
Yeah.
Where do we go now? What do we do now?
Yeah, it's a case of people sitting on cash, and I think a lot of people had plans to spend that, and then the budget sort of changed it for them. And now I think the answer is we don't want to just park it in the bank. Still want to do something, but they genuinely want to know the right advice. So we're going to give you our observations this morning. We're going to talk a little bit about the rental market. The rental market as well.
I think that Billy, you're right on what you say there. There's a lot of gravity naturally that people don't realize that people need to invest. For whatever reason, whether they have inheritance or whether they have super or whether they have, hard-earned money over the years, but they want to invest it into their future. It's not a greed thing. It's just purely a business thing where it's growth. Do you know what I mean? So, and everyone wants to water a plant and watch a tree grow. So there's not a lot of places, yes, you can put it into stocks, which is pretty obvious. And yes, you can put it into property, which is pretty obvious. They're probably the most two popular ones. And for the non-advanced investor, property has always been good because they understand it. Stocks spooked people a little bit. So in property, there's different aspects of property. So there's secondhand residential, there's commercial industrial. You can actually invest in property stocks, which is more like shares, dividends and stuff. And those people invest in property funds as bigger assets as well. But there's different asset classes, and typically your mum and dad investor buy a unit, rent it out, but it seems like a bit of a rocket's been put through that.
And it just that sounds boring. That sounds so normal. So like, why would you do that? I know it might have worked for your mum and dad, but I don't want to do that. That's kind of people's attitude sometimes.
Well, that's why you often hear of, I do hear of, and something, if I'm going to give you a phone number at the end of the show where they can get some incredible information to work this out. But Bitcoin's been a solid, a sexy thing to invest to for people, teenagers or people in their 20s, and there's been things like that people have purchased that have done okay or not done okay or whatever that's been. But what people don't realize, Billy, about property is the power of leveraging, and we still haven't covered the most explosive part of the property market, which I'm going to get to. But before we do that, I think what people must understand is if you've got $10,000 and you and you invest that money, you can probably get a 10 or 12 or 14% return on that cash. So what that actually means is you invest that into something. And I've heard, family members saying, oh, my accountant can get me 12% or 13%, or this year I got on my Bitcoin 26% or whatever that is. But what people must realize is that the bank will not advance a loan against a particular, like, or hang on, I'll say Bitcoin. For instance, a bank, if you've got 100,000 of cash, the bank won't say, here's another 200,000. Go, you can invest 300,000 now. The asset class, the most where banks will stand behind you, or probably almost the only asset class, is property. So if you've got $100,000, the bank will give you $400,000 and say, okay, go shopping to buy something for 500 grand. What that then means is here's the magic. The bank lets you keep the capital growth on 500,000, and the bank lets you keep the rent on 500,000, provide you pay an interest component on the 400,000. If you put that money, now here's this number I want everyone to do. Can you put this into the comments for me, Billy? 0460 111 111 0460 111 111. Type the word after, send the acronym to this phone number, 0460 111 111. Send IRR, internal rate of return. Now, what we did, which is pretty bloody incredible, is we went to Cotality and got 40 years of data on the Northern Beaches, 40, and said, give us all the strata sales and give us all the torrent sales. And then we said, show us what the market's done the last 40 years. Now, assuming that sort of growth over the next 10 years, which I think is a fair assumption, I then wanted to look at, if I put in a 20% deposit into a property or a 10% deposit into a property and the bank gave me the remainder, what my internal rate of return on that 100,000 or 10,000 cash would be. Guess what? It came to 28.5%. That was the return on my money per year, after I paid interest back to the bank on that money, after I got capital growth, and after I had a modest rental increase. So the return on your cash on property is incredible. Are you following me on that, Bill?
I think from memory, 10% was the typical deposit. 5%, they were playing around with those two figures, because a lot of first-time buyers, they're putting minimal deposits in. So you're up at a 95% LVR, which is, you don't get that sort of exposure on the size of the asset in any other type of purchase. So yeah, it's all right. Well, you still haven't given me the explosive market. So where is it,
Bill? I think the one to watch in the Australian property market, because people say, we have all these conversations as real estate agents. We've got 12 agents in the office in sales. We've got 12 agents in property management. There's 25 agents chop talking every day, landlords in all different markets. People are going, okay, I understand what you're telling me about land tax. I understand what you're telling me about the budget, but what do I do? And the one common thing that we are underpinning that is going to explode due to lack of investors coming into the market and due to lack of building in Sydney, and particularly in the Northern Beaches, is the Australian residential rental property market. That is going to be the single one. And there's industrial, commercial, shops, storage, units, build some duplexes, build a house, rent a house. There's all this stuff you can do when you're buying in property. But please understand this. The next 5 years of the Australian property market, the next 5 years, clip this, The next 5 years of the Australian property market, the rental market will explode due to what's been happening over the last 5 years, the environment. When you're making your next investment, please take that into consideration as the single most important thing if you're investing into property. And then what will spur off, what do you reckon is going to spur off that if people are following that breadcrumb, those breadcrumbs?
Well, I think a couple of the other things you've not talked about there is that the like population keeps growing faster than the rental market can keep up with. But more importantly, I think the pressure is concentrated around the major cities, because a lot of people are buying interstate, buying rural now, bigger home, newer home. So the old unit in the major city is getting a bit boring. The capital city populations grew, have a look at this, by 324,000 people between that 24 to 2025 year. And then in the last calendar year, Australia added another 412,000 people. They're coming into the major cities first before dispersing out. So it's already 5 of the 8 major capital cities are sitting at vacancy percents less than 1% at the moment. So I think that is where people are obviously looking to position their funds. I think that's where the breadcrumb is.
So there's building. You know, if you look at building, to develop something, the mud map or the back of the napkin maths was 1/3 land, 1/3 profit, 1/3 build. That's changed to 50% build. That's pushed land to 25% and profit to 25%. It sounds like there's good margins even at 25% for land or for profit, but it's actually not enough. So at the moment, we were banking on capital growth, which has been diminished, to actually make developments work. So it ain't going to happen. So I don't think there's going to be much coming out of the ground on the back of compliance with building costs and land costs and profit and stuff like that. That rental market, guys, I'm saying if you get in to that rental market today and you're negatively geared, say your returns 4 or 5%, like I am so confident that that's going to hit 5% in year 1, 6% in year 2, 7% in year 3 on the back of your rents going up, that people buy stuff from us on a yield today, but they never used to actually calculate that yield was going to explode. So if you're buying something today, your yield is going to explode in the next 1, 2 or 3 years on residential rents. Buy something residential.
There you go. Even better if you have a second income from one property, 2 incomes, 1 property. People love that at the moment.
They're both going up. Spot on. That's a really big one. Okay. Thanks, Billy Bob.
See you later.
Have a lovely day.
SMS IRR.